In this video, I'm going to show you my June results using covered calls and cash secure puts, and then we purchased dividend stocks. We made $22,938 selling premium, and then I'm going to show you how much I used of that to buy dividend stocks. And I'm going to show you in this video a members video about my current dividend tree plan. And we're buying 1,500 shares with all my selling premium profits. Stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, that's what we're going to talk about today. We're going to talk about my June 2024 results. We're then going to take a look at what dividend stocks I bought. And near the end of this video, I have an exclusive members video that I sent to the members that you can only see if you were a member. So we're going to talk about that here in a moment. Let's go ahead and start. We got June 2024. We are midway through the year, and where has the time gone? I'll tell you what, we started this year hoping to make more than we did last year. Well, we've already blown past that. And now what we're trying to do is just meet that $20,000 a month. I mean, this is insane. I remember when I first started selling premium here on YouTube some 6-7 years ago, I was just trying to make $1,200 a month, man. And then that turned into $2,500. And then we basically said, let's just make whatever we can. And that's what I've been doing. I have been staying the course, been selling calls and puts using the poor man's covered call. Whether the market's up, sideways, or down, we stay the course. And that's what we've done over the past 8 years. My very first month, I made $400. My very first month, I made $400. And now here we are talking about me making some $22,000. And my gosh, had I not taken that Las Vegas Sands hit, we'd have made $30,000 this month. But you know what? That's how it goes. So we're looking at 36 trades for this month. We make cash on cash because I use in and around $625,000. This is largely in my IRA. So for a lot of you out there that have IRAs, you can sell premium within your IRAs. You'll have to go to your brokerage. You'll have to set that up. But that's what I do inside of my IRA. I write covered calls, I sell cash secure puts, and I do the poor man's covered call. Now, you have to set up your account to do that, but you can do it because I am right now. You could see over the course of the month, we sold a lot of premium. And remember, all of my numbers are based on when the trade closes. Because when I put on a trade where I can make potentially $10,000 and I trade it quick and I only make $1,200, well, I'm not going to book $10,000 and then come back and edit that later, or where I only made $1,200 because maybe the stock fell. I wanted to get out of the trade or this, that, or the other. So all of my numbers are based on when the trade ends. And by the way, I do not buy my dividend paying stocks until the trade ends. If I were to make a trade right now and up front get some $4,000 in premium, I do not spend that because you know me, I'm very active. I might buy that option back in mid-contract, and then of course I'd only make maybe half of that, and that's when I buy the dividend-paying stocks. And that's what I do. And I've been doing this now for some 8 years to the tune of 36 trades a month. Yes, I am a professional stock trader. That's what I do. I retired from the 9-to-5 December 2022. I put in 30 years at the 9-to-5, and once I retired, I went ahead and sat behind my desk right here. And we are now professionally moving numbers, and what we try to do is make more numbers. And that's how we base our success. We don't base our success on anything other than that, because if I'm not making more numbers, then I'm not having success. So before we look at some of the individual trades, you can see I had no stock sales, which is very interesting. I did have some Leaps call option sales. You can see where I made nice money on coin, but I also took a negative hit on Las Vegas Sands. We did that video last week, which was a hard pill to swallow because it's a poor man's covered call and my expiration date was June. I was either going to have to buy this person's shares because it was an in the money Leaps call option and the stock was trading above my strike price, or I was going to have to take a loss. I didn't want to own the shares, so I took the loss. We took that money and we moved on. Moving on here, you could see that over the course of the month, how our profits laid out. 17,000 derived from the covered call. The poor man's covered call hanging in there. Again, we had a net loss when it comes to that Leaps call option. We had no dividends. That was surprising because generally the stocks I use, I might collect a dividend here or there. We definitely add that to the numbers because it's a part of my selling premium portfolio. And if a company like Cisco, Las Vegas Sands, or AMD were to distribute a dividend, hey, it's a part of the game, we would add it. We didn't get that this time, and so we have no dividends to register. Real quick, looking over the years, you could see almost $23,000 for June 2024 absolutely breaks a record for all of my Junes since 2020. Remember, I've been doing this since 2026, and the numbers are much smaller. The bankroll was a little bit smaller. I used about $225,000. So making $23,000 now just absolutely shows the progression. And if we just keep doing what we're doing, this number should continue to grow. Now, thinking about things that grow, we have our dividend tree growth. And of the $23,000 we made, we were able to invest $17,000 into my dividend trees. Now, I call it a plant. And what that means is this. I have a dividend tree stock that I'm buying right now. I am quote unquote planting it. So what I do is I buy up to 1,500 shares. Now, 1,500 shares was just a number I picked. So I try to collect 1,500 shares. And we finished up AMDY last month. You could see we put this money in. We now have 1,500 shares of AMDY. Once we finished AMDY, we moved to YMAG. Now, you're going to hear a video here in a few moments about why I picked YMAG. This is a dividend tree plan. And right now, I think I have about 200 shares already. What we do is we write covered calls and we literally print money. I know people don't like hearing that, but we literally print money. Where you did not have covered call premium profit before, you do a covered call trade, and what does it produce? It produces a covered call premium. That premium can then purchase a dividend tree stock. That dividend tree stock does what? It then pays us a passive monthly cash dividend. I call it my dividend tree investing. And what I want to have is a dividend tree grove, where I have some 10 to 20 of these types of dividend paying stocks generating $10,000 a month. Now, we also picked up some SPYT to finish up that dividend tree. And right now you could see all of my dividend tree plants right here. This is the dividend tree plant from my IRA. We are now generating $4,400 a month. So I went from nothing in mid-February. Then I had this idea, which, by the way, I think is a fabulous idea. We are literally building a legacy of cash flow. Taking those covered call profits and buying these dividend paying stocks. That's $4,400 I did not have in February, but now I do every single month, knocking it down. And YMAG is going to be added to this list. Now, a lot of people ask me, well, John, you make all this money writing covered calls. Why don't you take all the profits and write covered calls? And by the way, that would be some $129,000 since February that I have loaded up on these stocks. And that's a lot of money, man. $129,000. I can generate much more than $4,400. But again, it's my mindset. Hey, look, man, I have to do things that keep me excited. I move so many numbers around, I got to stay excited. So that's what I do. I buy these dividend-paying stocks, so when they give me the monthly dividend, we buy another dividend-paying stock. And what I want to do in 1 year, I want to stand there and look back and see how many I have planted and how much money that's going to generate in passive income. Me doing nothing. And what I'm hoping to do is have that number equal $10,000 a month. Now, real quick, you can see I do have other dividend tree plants, but that's from my taxable account, and it's always been there. That's a nice little chunk of change. We're looking to average some $17,000. By the way, that's May. Let me show you let me quickly show you June, because that's what we're talking about, right? Let's talk about June, and here would be June. Are you awake out there? Absolutely love it. We're at $15,000 for the month, and that closes our month. You know, you're going to have these fluctuations with the various yield max ETFs. You know, they're going to pay a lot of money one month, and they may not pay as much the next. Because remember, those ETFs use options to generate their dividend, and if they had an off month, they're not going to pay as much. That's why I want to keep adding to the dividend tree grove, so that makes up for it, right? So if I could do a dividend tree every single 3 weeks, man, it won't take long before we have all of this filled up. And could you imagine knocking down $10,000+ a month doing nothing? Follow me, and this could be your blueprint for success. Now, speaking of my membership, my members see all this and they see the exclusive videos that you don't see here. Just recently, I sent out a video to the members about Bitcoin and the Bitcoin ETF I bought. One thing I want you to know, when you're a member, you get exclusive content you do not see here. You could see them here where we talk about everything from dividend tree plants, how I roll stocks, talking about my Las Vegas Sands trade, talking about Clean Spark. I mean, we have exclusive content at the membership you just don't get here. And a lot of it can be about the poor man's covered call. Because there's more people on YouTube talking about the poor man's covered call. And to be honest with you, it makes me cringe every time I hear their rather weak videos. Now, I'm not criticizing anybody in particular, but I'm telling you now, if you're going to use the poor man's covered call, I want you to understand the dangers of the poor man's covered call. But if you understand every element of it, you could absolutely generate 3 times the profit. I do it all the time. So as a member, you get these kind of videos all the time, and I love doing them. You're going to get an example here in a quick minute. So if you want to be a member, go to my website, cptdashboard.com. I have a 1 free month offer for you there. Go ahead and get that 1 free month offer. Would love to welcome you aboard. I have 2 videos queued up for the members where we're going to talk about 2 covered calls that I've just done. I want to explain them to you. That's going to be the in the money strike and a deep out of the money strike. And we're going to take those profits and we're going to buy a certain dividend paying stock. cptdashboard.com, click upgraded dashboard, get your 1 free month. Now let's wind this up, and you do have that members video coming up here. So here's the breakdown of all my trades. You can see I break it down per week. A lot of people have been saying, look, man, you show us the numbers, show me the per week breakdown. Well, you can see the first week of June, we made $9,100. You can see the trades there represent quite a bit of the poor man's covered call. Purple being the poor man's covered call. So that was a nice week. We did have what looks to be like a loser. That's actually not a loser. I had to buy back this option because the stock had moved higher and the Leaps call option moved higher, and we make up that money. So technically, that is not a loss. In fact, that was a heck of a win. Now, looking at the next week, this was a winner up and down, did not have an issue. A lot of wins there. And I can tell you now, we did 1 cash secure put. The majority of it was the standard covered call. Absolutely love when we can knock down those kind of weeks. Also here, you could see we had a big Las Vegas Sands loss. I did the video last week talking about we had to take that bad boy. It was going to expire June 21st, so we waited to the very end, and we bought it back at a particular time because we didn't want to pay that much time value in my near-term covered call, and that also affected the Leaps call option. Again, poor man's covered call, I do it all the time. If you're interested in my membership, that's where you're going to truly benefit, because I have a lot of poor man covered calls on the books right now. Our last week in June, we turned out a very tidy $5,700. I actually had to go to work here, man. You could see I put on trades and I bought them back in haste. We wanted to knock down anywhere from $300 to $400 to $500 per trade, because at this point, I am not going to make my goal of $20,000. Well, we end up running the final week out. We get to $23,000, and I absolutely love that last week. You could see all green, but you could see how I really made a lot of it work with quick buybacks. Now, real quick, before I let him take over, here is my 2024 cash flow. This includes cover call writing, cash secure put selling on the left side, and our dividends on the right side. Just so you know, I don't commingle these and my cover call results. Covered calls is covered calls. Dividends are dividends, but this is my total income being a professional stock trader in 2024. You could really see that we're trying to achieve that $10,000 a month on the dividend side, and we are absolutely knocking it out of the park. We made that decision way back in March that we wanted to try to achieve 10,000, and ever since then, with the dividend tree plants, it just keeps adding up. We're already at $76,000 in dividends annually, and it's only June. Could you imagine with dividends making some $150,000 in dividends? Well, we're on pace for that. Then you look at the cover call rights and you could see here we are June 29th and we're already at $234,000. And just think, if we come in at $20,000 a month, just a mere $20,000 a month, we could actually get very close to $370,000 writing covered calls. When you add the $150,000 in dividends, this is ridiculous money. But we started with one stock. We started with a $400 month in 2016, and here we are. We are now moving numbers, and we're making more numbers. Hey, look, I'm going to turn it over to him. This is a members-only video that I shared with them. If you want to be a member and get your one free month, cptdashboard.com, click Upgraded Dashboard. You will get all of those, including watching the videos in the phone app. You can literally download the phone app and watch the video. No YouTube ads. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable. Hey, welcome back, everyone. Let's talk about my dividend tree. We went ahead and finished the AMDY dividend tree plan. What does that mean? Today we bought the 1,500th share, and now that tree is done. That tree is planted, and it will now generate cash dividends monthly. Now, since we started this back in February, if you remember, I believe it was February 18th when we started this little idea, where what I would do is take my cover call profits, or at least most of them, and drop them into a current dividend stock that I'm buying. And in this case, it's been the ETFs from YieldMax. I absolutely love the high yielding dividends. I actually believe we will make our money back before they go away. Now, what does that mean? Will they go away? A lot of people are worried about the NAV, because these things keep falling and falling and falling, because the NAV, the net asset value, usually when a ETF or a closed-end fund uses the covered call right, they actually own the shares. Well, that contributes to the NAV, so it holds the share price up a little bit. Well, in this case, YieldMax is not using that as a strategy. They synthetically create a position, and then what they do is they write calls against that. In fact, they write weekly calls. So what's happening is they're generating huge covered call premiums, and they distribute it all to their shareholders. Now, this causes the NAV to erode because there's not much net asset value when they're not owning the shares and they're giving those fat dividends to the shareholder. So that's going to be a worry. Now, one thing I'm going to tell you is this. ULTY, which right now it's at $13. ULTY is paying a massive $1, $2 per month dividend, and their share price has absolutely tanked because of it. Look, you can't give a $2 dividend on a $15 stock and then have it stay at 15 or go higher. They don't own the shares of the underlying. This is causing the share price to fall. So when you look at the share price of all of these things, for the most part, they move sideways to higher. They fall the value of the dividend, trade sideways to higher, and move the price of the dividend, right? The value of the dividend. So ULTY, which started, I believe, at $20 at inception, is now trading at $13. So it's return on capital at its best. Now, ULTY recently changed their strategy where they are now owning the underlying. And this is what I believe is going to happen. I believe YieldMax and Defiance are going to reboot the strategy. They're going to do the same thing. They're going to write these weekly covered calls. They're going to be very aggressive. They're going to pay a large monthly dividend. But I believe, just like they did with ULTY, they might start owning the underlying, which gives them a NAV. And what we're hoping for in that NAV is that they're owning quality stock. Now, ULTY is very aggressive, and they use very aggressive stocks to generate a lot of covered call premium. One of the stocks that I use that ULTY uses is CleanSpark. CleanSpark is a volatile, small Bitcoin miner. They have a great business. They're killing earnings. But at the end of the day, it's very volatile. The stocks move up and down in big waves. I mean, you could have gotten involved in CleanSpark just last week, I believe, for 14x. And this thing hit 19x and has peeled back to 70. So they move. It's volatility. That's the name of the game. If you're going to sell premium, you want volatility because volatility gives you more premium, right? We're in the time game, right? If you're a buy and hold investor, then this is not what you do. You buy a stock and you hold it and you hope you make money. We're in the selling time game. We pay for time and we get paid for time. It's all about time. And what gives us more premiums is the volatility. So we want volatile plays. Now, that doesn't mean we want risky plays. We want volatile plays. And this is why I use 3x leveraged ETFs to the indexes. You will see me use TQs, TNA, FAS, Yin. These are all indexes, so they're diversified. They just happen to move 3x leveraged. That gives us that volatility, but we're still trading the index. If you think the S&P 500 is risky, then don't trade in the S&P 500 and don't trade in UPRO. Because you're really going to think UPRO is risky because people measure risk by how big the swings are in the stock. And that's the wrong way to think. It's all about volatility. Now, let's talk about my newest dividend tree plant. And if you watched my video on this just the other week, we're going with YMAG. Now, I'll tell you why we're going with YMAG. Because I like YMAX. See, YMAG and YMAX are a collection, right? It's an ETF that has a collection of YieldMax ETFs inside of it. So in the case of YMAX, you have, 10 of the individual stock YieldMax ETFs inside, such as Coney, Tesla, PYPY, AMDY. So what YieldMax is able to do is make sure they have a correct allocation, but they move them around, right? They jockey them around. So I love YMAX. And in fact, YMAX has kept its NAV because it has all of these other ETFs inside of it, lifting it up. And that's what I love. So YMAG does the same thing. And we're going to take a look right quick here. YMAG, you can see its top holdings are the individual stock ETFs for these various companies. And say that a couple times. We got NVIDIA, we got Tesla, we got Apple. We've got Facebook or Meta. We've got Google, Microsoft, Amazon, okay? And then, of course, they got the government bonds in there for collateral. So they are using the biggest or the Magnificent Seven, and they're using those individual YMAX ETFs to produce this dividend. They call this a funds of fund, and I love it because we get a little bit of NAV action here, or what I mean is the value stays a little bit higher. You could see it's a $20 stock. It has not fallen like ULTY to 13 bucks. Yet they pay a very healthy dividend. Let's take a look at that dividend. This is what I truly want. I love the $1. I love the $2, right? And at the end of the day, man, that's beautiful when you see $1,000 checks. But I have been a closed-end fund investor for years where 9 cents a share is beautiful. Well, I have a bunch of those. I want a more consistent sideways to higher trade. And stocks like YMAG, YMAX could offer that for me. They keep their value because of what's inside. And, of course, the dividend. The dividend here last month for YMAG was 67 cents. I love that. That's a nice little payout. Before they paid out 62, very consistent. Then 50 or 60 cents. See, this is what I like. These are the biggest companies in the world, and YMAG is using them because they're using the Yield Max ETFs for the individual stock. So I love that. We've got a team that is trading these options, and these are true pros, okay? These are guys that have traded on Wall Street, and they're doing weekly covered calls, and they're doing it in a way that generates max value because they're simulating stock ownership. Now, again, the pros are the fat dividends they pay. The cons is when they distribute the dividend and there's no net asset value. So what happens when you get involved in something like ULTY and you paid $17 and they keep paying the $1, $2, $1, $2, they're going to reverse split the stock at some point. So what's going to happen is if you have 3,000 shares, it's going to go from 19 to, let's say, 9, and they're going to reverse split it, meaning they're going to take half your shares and your value goes from $9 to $18. So that's the plan. They did that with Tesla. So I have no doubt that if they don't change the underlying idea of adding NAV by owning the shares, they're going to have to reverse split them or else they're going to zero. Now, with that said, I believe, and my hunch is that we as investors will collect 150%. 150% of our money. I believe I'm going to collect all of my money. So if I'm in ULTY at 19, I'm going to collect $19 in cash money. But because of the reverse split idea, they're going to keep doing this. And I'm still going to keep collecting cash. Yes, the value of the position is down, but the cash will keep coming in. And that's how you have to look at it. It's like you're getting your cash back monthly. And one thing I'll say, and I'll leave you on this, a lot of people believe these things are just going to flat out go to zero. Well, that's not the case, because there's this other element to all of this that nobody talks about on YouTube: supply and demand, right? Because you can distribute a dividend and the stock goes higher. What makes the stock go higher? The demand of buy and sell. So you're not getting the straight down effect. What you're getting is a lagging effect, and you're collecting these huge dividends, and this could take a year before they have to reverse split anything. ULTY is going to reverse split much quicker because they pay like $2. Okay, that's a lot of money. But these stocks that only pay like 32 cents and it's a $20 stock and they're invested in writing options, they don't have to pay out that much per month. So in one day, the thing could fall 32 cents and the next day the market's up, and guess what? People are buying. I'm not flipping out, and I'm staying the course. I'm writing covered calls and I'm taking that profit and I'm buying these stocks. These ETFs are generating passive monthly income, and that's the plan. And I'm going to feed the beast, meaning I am going to continue to plant my dividend trees, and the dividend trees themselves will plant the current one, which means I am going to be able to buy more of them quicker. And I'll tell you what, it will not surprise me if we get to a point where we're literally planting a dividend tree every single 2 weeks. And that could absolutely expedite next year if we keep doing this, where we're actually having the dividend trees paying for a new dividend tree plant. That would be unbelievable. Hey, look, I'm going to leave it there. YMAG is our next dividend tree plant, and I've already planted 65 shares. So if you ever have a question about any of this, feel free to ask. But what I'm going to tell you is this: go to YouTube, search all of the tickers for all the various ETFs that are paying these huge monthly returns, and you're going to hear a number of great bits of videos out there. Learn from them. Just expand your mindset on all of this. You know, at the end of the day, just keep selling premium, keep planting your dividend trees, and when your dividend trees pay, take that dividend money and plant your current tree so you can plant more trees quicker, because the effects are insane. When I started this, you know, we're looking at $1,000 a month. We're already 123 days into this. I have planted all of these trees. That is the monthly take. $5,600 every single month. That is building wealth. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.